All right. So, I think I had mics muted, but if you guys want to come off of your mics, and no worries, only I will be able to hear you. So when you talk, I'll repeat your question out to everyone else, and then we'll answer the questions. All right. So Jackson says, let's see, what do I do in times where I am down a couple of percentages and I don't know what to do? All right. So if you're asking that question, that means that you may not completely understand how this strategy works and how things play out long term when it comes to investing. All right. So let's do this. All right. We're going to go through an exercise. This is going to be a mental exercise. This is going to help you out so much. All right. So this is going to be a psychology. There we go. Psychology exercise. Right. This is going to teach you exactly why you should not be fearful, hesitant, or anything of the sorts within the market while using this strategy.
Do you want to make money on autopilot? Do you want to increase your income? Do you want to learn how to trade? Do you want to understand the market? Do you want to make money when the market is up and when the market is down? If this is you, all you have to do is click the link below and Mac will contact you.
What I want you to do is I want you to grab a quarter. So grab a quarter, okay? Allow heads to be a loser, all right? Actually, let's do heads winner. And then we'll allow tails to be the loser. So tails, loser, all right? If we're using a quarter, this means 50% of the time we win our trades and 50% of the time we lose. Okay. Now, with this strategy, your win loss ratio should be better than a 50-50. With this strategy, you should be, pushing towards the 60-40, if not 70-30, right? And most of my students are between a 70-30 and an 80-20, right? Now, of course, there are going to be market conditions that we cannot control. There are going to be fundamentals that we cannot control, right? Which is why we are going to flip the quarter, right? So if we're just doing a random experiment, okay, and let's say we're going to take 12 trades, all right, I'm going to take my coin and I'm going to flip it 12 times. I'm going to put a W for a win. I'm going to put an L for a loser. So let's get to flipping. All right, first one is heads. My bad about that, guys. That was probably pretty loud. So first one is heads. All right, and trust me, this is definitely going to make sense as we continue going through, but just stick with me here. All right, stick with me. All right, next one, heads. So we have two winners. Okay. All right, we have a loser. We have another loser. All right, we have a winner. I'm putting H and L. I'm so used to doing, lower lows, lower highs. All right, we have another loser. We have a winner. We have a loser. Ooh. So H. We'll just stick to the same script. So we have a loser. So we have another winner. All right, we have a loser. We have a loser. Wow, and we have a loser. Okay, so let's say on average you look for 5% return on investment with your trading. Now, as you guys can see, looking for 5% is quite easy. Now, if you don't think you can hit 5% consistently, all right, then move it down to 3%, 1 to 3R. All right, risk to reward ratio. All right, but on average, let's say you hit about 5%. Okay, so every head or every winner we have, that's going to be +5. Every loser we have, because we manage our risk, that's going to be -1. It was a 50-50 chance of winning or losing. We have 1, 2, 3, 4, 5 winners, and we have 7 losers. Right, so that's about what I want. Right, it's about 50%. As close as it can get. Anyways, so let's go ahead and just count everything up. So 5, 10, 15. So 5, 10, 15, 20, 25. It's 25% return, right? Because we had 5 winners. Now losers, we had 7 losers. So that's a -7%. loss, right? Even with these numbers, that still equates to 18%. Now, sometimes you get those losers in a row, back to back. Sometimes you get those losers, 3 times in a row, back to back to back, right? Right? We're right here in this area. Loss after loss after loss. But guess what? It only takes us one trade to wipe all of this out, right? That is why you cannot allow your psychology to get to you, Jacob, right? Take every single trade that you see, okay? If it's difficult for you to trade 3 assets, just choose one. My recommendation would be the Australian dollar versus the US dollar, right? But even though we don't know the order of wins and losses, as you guys can see from just the results within the Telegram community, right? January, we had a plus 20% return. February, we had a plus 17% return. March, we went absolutely bananas, plus 49% return, right? April so far, this is how it's looking.
What's going on, traders? This is your chance to unlock endless possibilities with our unbeatable trading program. Priced at only $53, this deal is just too good to pass up. Come get access to a wide range of features and benefits that will take your trading to the next level. Whether you're looking to improve your profitability, streamline your income, or simply invest your own money, our unbeatable trading program has got you covered. Don't miss out on this incredible opportunity. Sign up today.
What is it? 6.4%, right? So this is how we're looking right now in April. However, that doesn't even come close to our March, our February, or our January. And this is what I want people to see and realize, right? Also, keep in mind, this is our second quarter of the year, but first month of that second quarter, right? So definitely keep that in mind. So as it relates to that, basically just keep your head in the game, bro. Just keep trading, right? Keep looking for the next setup. It's all going to be random. You're not going to know, how it's going to form or how it's going to take place. But just take the next trade. All right. So just make sure you guys are taking every single trade. All right. So we're ready for the next question. You can either speak out loud or type it out in the chat. It's up to you. All right. So next question is, how do I know when it's time to analyze or when it's time to sit on the sidelines? Okay, perfect. That's a really good question. So when it comes to that question, you're going to know to trade, right, when you have your confluences met. Okay? I know it's time to look for my confluences when I see a breakup structure. Okay, and I need that to be strong structure. All right, if I don't see a breakup strong structure, then I know that there's no reason for me to even look for my confluences. Right, you're not going to want to look for a trade when the market is accumulating, or when the market is, let's move that to the side, or when the market is basically just not giving you your confluences, right? Those are the times that you're not going to want to trade. Those are really important questions. I don't get them quite as often anymore, to be real with you guys, but that's definitely an important question. Whenever you see that breakup structure, then okay, let me look for my confluences and let me start to apply this, the strategy that Mac has taught me. Because remember, guys, all you're doing is using the confluences to find your POI after external structure is created, right? Like that's all we do, right? You look for your confluences only after your confluences form, you're only looking for the POI after the structure is created. Elaine, do you have any questions for me? I believe you're the only one that hasn't asked.
No, I don't have any questions as yet.
Okay.
Okay.
All right, let's move this over here. All right, perfect. So, you're only looking for, that POI, right? After the structure is broken. Before the structure is broken, there's really nothing to do, right? Which is exactly why on GBP USD, well, it's one of the reasons on GBP USD, we don't have anything to do right now, simply because we see that price is creating what? Higher highs and lower lows, right? Mac, I'm still having a hard time with psychology. What do you do in order to take the next trade when everything inside of you is telling you not to? That really boils down to discipline, right? Like it really just boils down to discipline. Okay, so check it out, right? Like this is a setup that we've seen, I don't know how many times, countless times. Nice POI, right? We've seen this trade take place a million times now. Price trades into it, then trades through it, right? Euro USD, right? Same thing, except different time frame. It was on the M15, right? Same exact setup that you guys just saw. Exact same. Right, but you guys get the picture. Price trades into it, reacts, trades through. Hold on, I'm going to get to my point in just a second. Hold on. So AUD USD, right? Where are we at? Oh, here, perfect. So AUD USD, same exact setup that we just looked at, right? Break of structure here, but price reacts and then trades through, right? Same setup over and over and over again. We go to UCAD, right? Mitigation of these sell to buy wicks, sweep of liquidity here, push to the upside, break of structure here, and then a micro break of structure here on the lower time frame, right? You can see that on the H1, but it's just easier to break down on the M30. So same exact thing here. What does price do? Price trades into it, respects it, 11.2% return, right? Like Jackson, you're not going to know, brother, which trade is going to be a winner and which trade is going to be a loser. Just like we didn't know here, right? Right? Remember the exercise we did here? There's no way for us to know whether or not it's going to be a winner or a loser. But what do we continue to do? We still continue to flip the coin. We still continue to take the next trade. We still continue to apply the strategy, right? So practice this psychology exercise with your quarter or dime or nickel, whatever it is, right? Practice this. Take the trade, 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 right? Like on these UCAD moves here, I kid you not, I was trading with a trader, and it was a one-on-one session, but it was the live market, right? And we were looking to trade this move here, right? I'm gonna break this down for you guys. So as you guys can see, we weren't necessarily tagged in. It was the PM session. We were looking to enter the market. I told him, hey, you know, the UCAD trade has been giving nice continuations. Let's look at UCAD. So we checked out UCAD, right? This is the exact trade setup that he had for himself. So one of the trades here, now this was during the AM session, but it's all good. Risk on this was 15 pips, right? And I told him we'd be looking to target, you know, this week's structure here, right? We were looking to enter here. Even though it's just a 2.2, you know, a 2.92% return, how he does his risk management is slightly different, right? And everyone can do their own risk management. It's completely up to you. You know, that's your risk management is your thing, right? So I risk 1% of my account per trade. However, because of his risk, he was looking for a $2,000 return, right? These are the types of numbers that you start to get into after you really get a grasp on the strategy, right? Whether you're a funded trader, whether you are a, you know, someone who trades their own capital, really doesn't matter. At the end of the day, this is what I'm talking about. This is the type of risk to reward you should be working with when you are investing your capital, right? Not a bad return by risking $360, right, for a $2,000 return. Second trade of today was here. All right, so let's go over this trade really quickly. We got onto the M15, so we can see that sweep of liquidity here. Swing low, price trades into it. Sweep of liquidity. We can see here we have some type of accumulation on the supply side, right? This entire range here. So some type of accumulation with supply here, but we can just mark the mitigation here, right? I like to keep my charts clean, so there we go. Mark the mitigation. We also could use this as the sweep of liquidity as well, right? As inducement for this area here, right? This actually wouldn't have been a bad buy opportunity, to be honest with you. But I would have been looking for price to possibly interact here since we already closed that inefficient pricing here. However, stop loss still would have been here. Very interesting. Anyways, consolidation, right? And we see we have a break of structure, right? So let's go back to the M30 in this one. Perfect, right? Refinement to this candle here. Why? So really, this is the demand here with these bearish candles, right? But we're just going to refine to this entire candle because we have to also understand where our stop loss is going to be. Now with this trade here, stop loss 19 pips, right? And you may be asking, okay, so where do I target? Remember, if you don't know where to target and you don't know what's weak, right? For example, this would have been weak here. However, it's 0.82% return. There's no way we're taking that as a trade. There's just no absolute way, right? So now what we do is we measure the manipulated range. Once you measure the manipulated range, you're then going to look for of that manipulated range, right? Now, a lot of you guys ask me, hey, Mac, why on each individual trade, your percentages have decreased? And it's because I don't look for confirmation entries as much anymore. A good example of a confirmation entry would be this trade here, right? Back when I only traded confirmation entries, that's when I would hit, 8, 9, 10, 11%, 15% per trade. However, where I'm at right now in my trading career, I just look to take entries off of higher time frame POIs, macro POIs. However, on Tuesday, right, this was the confirmation entry taken, right? This was the H1 POI here. Here we can see all of our rules were met. Very minimal drawdown. Stop loss rounded up to 5 pips and targeted this week high here for about 11.2%. Right? So there are times when it's very, very straightforward as it relates to taking these trades. Also, what you could do is, let's say you want to wait for a confirmation entry, but you also want to be able to catch the trade in case price, taps into the region and then just shoots away. You can set, buy and sell stops. Okay. The only thing about that, if we would have set a buy stop here, as you can see, we would have been tagged in here, but the trade wouldn't have taken place for another, or the entry wouldn't have taken place for another, 1, 2, 3, 4 hours, right? If you took a buy limit, right, you still would have been tagged in with this candle here, or maybe with spread, maybe it would have been this candle here, right? But you're still waiting, right? So yeah, that is something to keep in mind for sure, Jacob. Absolutely.